A warm welcome to everyone. Today we are going to do the part B of valuation of goodwill, in which we are going to do some practical examples. Now, what is goodwill? It is a good name or the reputation earned by a firm. It is an intangible asset. It is the value of business over and above the value of its asset. It is a difference between the purchase price and the value of net assets. It has positive impact on future turnover and profits of the business. So basically goodwill, when the word goodwill comes to our mind, it is basically the reputation earned by the firm over the years. It is an intangible asset because you cannot touch goodwill, you cannot see goodwill. Basically, you can feel goodwill. That is why it is an intangible asset. Its value of business over and above the value of its assets. So, the value of business which you get above the assets, apart from the assets, the extra amount that is in asset, that is the value of goodwill. And second thing is that if you want to know what is the value of goodwill, you take the difference between the purchase price and the value of net assets. The difference in the amount is the value of goodwill. And moreover, it has a positive impact on the future turnover of the profits of the business. Now, there are some factors that affects the valuation of goodwill. That is good public relation. If you have good public relation, ultimately you gain the goodwill among the general public. Then if you have regular customer and you have maintained trust in your customer, this is also one of the factor that enhances your goodwill. Then thirdly, the quality products that you provide at a reasonable price also helps in valuation of your goodwill. Then your managerial skills, with how efficiently and how effectively you deal with your customer and how do you manage your business, also enhances your goodwill, and therefore it is one of the factors that affects the valuation of goodwill. Another thing is that location of your business. If your business is located in a very remote area, so you don't have regular customers, you won't be able to maintain good quality relations, you won't be able to give quality products at reasonable price. So ultimately it is one of the factors that affects the valuation of goodwill. On the other hand, if your business is in the main center of the city or heart of the city, you are able to maintain good relation with your customer, you are able to provide them quality products, you maintain the good public relations, your managing skills ultimately enhances. So ultimately this location of the business also affects the valuation of goodwill. Then what are your relation with your suppliers also affects. If you don't have good relations with your suppliers, that is, you don't do timely payment to your suppliers, you don't deal with in a good manner with your suppliers, you default in payment, then ultimately supplier will not supply you goods at time. Ultimately you don't have goods on time, you won't be able to deliver goods on time. So it is one of the factors that affects the valuation of goodwill. Another thing is that employees. The employees of the organization is the major face of the organization. How you deal with your employees ultimately affects the valuation of goodwill. Now there are some methods of valuation of goodwill. The first method is simple average method. Second is super profit method. And third is weighted average method. Fourth is capitalization. So there are two types of capitalization. First is the capitalization of average profit. Second is the capitalization of super profit. So these all methods are used in order to calculate the valuation of goodwill. So first is your simple average profit method, second is your super profit method, third is your weighted average method, and fourth is your capitalization method. Now either you capitalize your average profit, either you capitalize your super profit. Now the first method we are going to discuss is simple average profit method. As the name suggests, we have to calculate the average of profits in order to find out the value of goodwill. The formula of calculating the goodwill under simple average profit method is, that is, average profits into number of years of purchase. So first of all we have to calculate average profits. Average profit is equal to total profits upon number of years. Number of years of purchase means the number of year for which the firm is likely to earn the same amount of profit. That is, the amount of profit is same for a certain period of time. It donates the number of years of purchase. So average profit is calculated through by dividing the total profits by number of years, and when you arrive at average profit, these average profits are multiplied by number of years of purchase, so you get goodwill. Now there are some considerations or some points to be considered before calculating average profit. First thing, that any abnormal profit should be deducted from the net profits of that year. It means that any profit that you earned apart from the normal operations of the business should be deducted from net profit. Second thing is that any abnormal loss should be added back to the net profits for that year. The loss which are of normal nature, that are to be included, but if any abnormal loss is there, that has to be added back to the net profit. Third thing is to be remembered that non-operating incomes, that is income from investment, should be deducted from net profits of that year. That is non-operating incomes, the income from the investment. These if any kind of income that is generated from your investments, it is not operating income. Operating income is the income which you earn from the operations. So any non-operating income is there, you should deduct it from the net profit of that particular year. So these three considerations has to be kept in mind while calculating the average profits. Now I'll explain you this method with the example. See, the profit for 2010, 11 and 12 are given. That is, for the 10 is 1 lakh, 11 is 1,25,000 and for 12 is 1,40,000. The profits of 2010 has been reduced by 15,000 because goods were destroyed by fire. Now, you can tell me that goods were destroyed by fire, it is a normal loss or abnormal loss? This thing have to be considered. Third point is given that non-recurring income of rupees 10,000 is included in profit of 2011. That is this non-recurring income, with income which is not on regular basis. So it is included in profit of 2011. Another consideration is that profits of 2012 include 10,000 from income from investment. Now income from investment is abnormal income. It is not the operating, it is a non-operating income. So we have to calculate goodwill on the basis of 4 years purchase of average profit for past 3 years. आपको you are given the profit of past 3 years. First in 2010 15,000 abnormal loss is there, we are going to add it back. Then in 2011 there is a 10,000 profit of non-recurring nature is there, that is again deducted. In there is a non-recurring again income is there in 2012, it is also deducted. So this is the profit that we arrive of 2010, 11 and 12. Making the average or taking the average of these profit, that is total profit divided by number of years, we get the average profit of 1,20,000. And we know the formula of goodwill, average profit into number of year of purchase is goodwill. So we got the average profit of 1,20,000 into number of year of purchase. So the amount of goodwill comes to be 40,000. Now second method is super profit method. Now the name suggests goodwill is calculated on the basis of super profit. Now what is super profit? The profit that is excess of actual average profit over the average profits is called super profits. That is, the excess profit you are earning over the average profit is known as super profits. Now the formula for calculating goodwill under super profit method is that goodwill is equal to super profits into number of years of purchase. Now the word mentioned in the formula is super profit. Now what does this super profit mean? Super profit means average profits minus normal profits. Now what are these normal profits? Normal profits means the capital employed into normal rate of return divided by 100. Now we take one another example for this. We are given with the average profit of 60,000 and the capital employed is 5 lakhs. And the normal rate of return given is 10%. We have to calculate goodwill for the 4 years of purchase according to super profit method. So what all things we have to calculate? We have to calculate normal profit, we have to calculate super profit, then only we are able to calculate goodwill. Now what is the formula for normal profit? Normal profit is equal to capital employed into normal rate of return. Now capital employed is given in the question, that is of rupees 5 lakhs into 10%, normal profit comes to be 50,000. Then we have to calculate the super profit. The formula for the super profit is average profit minus normal profit. The average profit is of 60,000 minus normal profit is of 50,000. The super profit comes to be 10,000. So the goodwill is equal to super profit into number of years of purchase. So the super profit is 10,000. 10,000 into 4, that is 40,000 is goodwill. Now the third method is weighted average profit method. Again this method is modified version of simple average method, because in this method each year profit is adjusted with respect to the weights in order to calculate the product. Then the total product is divided by the total of weights to calculate the average, weighted average profit. Thereafter the weighted average profit are multiplied by number of years of purchase. So what all we have to do? First we have to calculate weighted average profit. Now how to calculate weighted average profit? We will do the total products of profit upon total weights. That is, each year is multiplied with the weight. You get the product of the weight, do the total of the weights and divide by total of weights. Then how to calculate goodwill? When you get the weighted average profit, it should be multiplied with number of years of purchase. And the last method is capitalization of profit. I told you the capitalization of profit can be done in two ways: capitalization of average profit, and second is capitalization of super profits. For doing the capitalization of average profit, the average profits are multiplied with normal rate of return into 100. For the capitalization of super profit, we have to multiply super profit with normal rate of return into 100. So these were the methods for calculating or for the valuation of goodwill. So we generally have four methods. I repeat once again: average profit method, second is your super profit method, third is your weighted average profit method, and fourth is your capitalization of profit method. And the capitalization of profit method comprises of two types of capitalization. First is the capitalization of average profit. Second is the capitalization of super profit method. I hope you are able to understand the concept of valuation of goodwill. How do we evaluate the goodwill? What do you mean by goodwill? And what are the methods of valuation of goodwill? Thank you. Hope you are able to understand the concept of valuation of goodwill. Thank you.